Hello there. Welcome back to Financial Accounting in 5. In this video, we want to look at a question paper of June 2021. And this question paper is what the preparation of notes and a statement of financial position on balance sheet. So the question reads, we've got question 4, and the question reads, J. Kumar has been trading as a general ledger, as a general dealer. It did not keep complete account records. He approached you to draw up his financial position for the year ended March 2019. The following balances were in his books on 30 March 2018. So you're given there a fixed assets analysis in terms of the summary of vehicles, equipment, and also we've got other assets that we are given there on the debit side. And then we've got some um, uh, we've got some details again on the other side where we've got capital drawings and also details of our liabilities. So this is what we have according to the information that we are given there. And beneath that, we are given additional information which reads, after conducting an investigation, you establish the following. We are given this information as our additional information from information number 1. And then we'll see that it's extended to information number 9. Then all the required parties saying draw up the balance sheet of, for the year ended 30 March 2019 and show the notes as indicated in another. So in this video, we are just going to look at the notes, and we are going to look at the note of the property, plant, and equipment in particular. So we are just going to enter the note for the property, plant, and equipment. So this is the note that we have. So we are going to start with the vehicles, and then we go to equipment. So we've got columns that we have there in terms of gross carrying value, which is the cost price that we have, and then the accumulated depreciation, and then the net carrying value. Remember, these values are at the end of the financial year. So we can go back to the question to identify in terms of vehicles, what is the gross value. So if you go back to the question, you see that if you come here at the beginning of the question, that's where we've got the information. You'd see that we are given the following balance were in this book on 30 March 2018. And also let's take note of the financial year in question. We have got the financial year ended here, financial year ended on 30 March 2019. So what does it mean? It means the financial year we are trying to look at started on the previous year, which is 1 April 2018 to 30 March 2019. So this is our financial year. So let's just take note of this. Very important for you to take down the financial year because of the calculations, especially for depreciation and any other calculation that needs you to make a proportionate calculation according to the number of months applicable. So this is what we have. So what we're going to do is we're going to pick the cost price, that is the gross carrying value at the beginning of the year. So for vehicles, you'd see that we have got 25,000 that we are given here. This is 25,000 that we are given at the beginning of the year. But the figures that we are going to put there in the on the property, plant, and equipment is at the end of the year. So we want to see whether there's any other vehicle that was acquired during the year. So what we can do now is to go through all the additional information to see if we have got any other vehicle that was purchased or disposed during the year. So if you go down, you'll see that here we have got equipment with the cost of price of 6,700 rands and carrying value. And this is for equipment, so we can just skip this information and try to see what we have in terms of the vehicles. Right, on item 9, that's where we have got information for vehicles, and it reads right of depreciation on vehicles and 15% per annum on diminished balance. So we see that we have got nothing in terms of vehicles that were purchased or disposed during the year. So it means the cost price that we have, or the gross carrying value that we have at the beginning of the year is not going to change. So we're just going to use again this 25,000 at the end of the year. So we go to the other section and put that as our closing gross carrying value. So here we are saying we have got 25,000 as our gross carrying value. Then we go to accumulated depreciation. we go back again to check what we have in terms of accumulated depreciation. So you'd see that these balances are 30 March 2018, which is the beginning of the year. So for vehicles, accumulated depreciation that we have on vehicles 6,300. So 6,300 is at the beginning of the year. So the accumulated depreciation that we want to put in the note is at the end of the year. So we go to the where we are told about how to calculate depreciation for our vehicles. Go to the last item, which is write-off depreciation of vehicles at 15% per annum on diminishing balance method. So we are going to say 15% of the carrying value at the beginning of the year. Then we find depreciation for that for vehicles. Remember, there is no vehicle that was purchased during the year, no vehicle was disposed. So we are just going to use the figures that we have at the beginning of the year. So if you come here, you would see that our costs at the beginning for vehicles 25,000 accumulated 6,300. Remember, on the diminished balance method, the formula that we use to calculate depreciation using the diminished balance method, we say a percentage times our carrying value, where our carrying value is equal to our costs minus our accumulated depreciation. So to get the carrying value now, we have to first try to calculate the figure for carrying value. So we are saying our cost that we have there is 25,000, and then we subtract accumulated depreciation, which is 6,300. And then let's try to see what we get there. We say 25,000, and then we subtract our 6,300. Then we get your 18,700. So it means sorry, our carrying value at the beginning is 18,700. So we can now calculate using our 15%, using same percentage of carrying value. So our 15% is 15 over 100, and multiplied by the carrying value, which is 18,700 over 1. Obviously, when we calculate this, let's try to see what we get there. Then we multiply by 0.15. You are going to get 2,805. So it means here we got 2,805. So this is the depreciation for the year for vehicles. So to get the accumulated depreciation, we are saying accumulated depreciation at the beginning 6,300. 6,300 at the beginning. Then we get what we got for the year. Then you get your accumulated depreciation. So we are saying now 2,805. Then we get 6,300. Then the figure that you are going to get is 9,105. So this is what is the accumulated depreciation for vehicle that we are going to put in the notes. So we are going there, just put 9,105. So here we are saying accumulated depreciation, we've got 9,105. And remember, to get our net carrying value, you say costs our gross carrying value minus accumulated depreciation. So we subtract. So say 25,000 minus 9,105, you are going to get your 15,895. So this is what we have in terms of our vehicles. Then we go to equipment. We go again to check what we have in terms of equipment at the beginning of the year. So if you come here, you see that this, let's try to check the figure that we have there for equipment at the beginning of the year. So for equipment, if you come here, you'll see that we've got 83,400. This is the gross carrying value at the beginning. And then we check now if the additional information, if we have got any equipment that was purchased or disposed during the year. So if you come here on item 8, equipment with the cost price 6,700, the carrying value of 2,200 were sold. So we have got equipment that was disposed 6,700. This is a subtraction. Then we also have next service saying new equipment was bought for 9,300. So we bought another new equipment that was bought. So we are going to subtract its cost price minus 6,700, and then we add the one that was bought 9,300. So if you come here, you see that we just check the figure that we have equipment at the beginning. So you see that in the beginning, equipment will be 83,400. 83,400. So we're just going to say 83,400, and then we subtract the one that was disposed, 6,700, and then we get that was purchased, 9,300, to get the cost at the end, or the cost carrying value at the end. So if you do that, you'll see that you are going to get 86,000. You're going to get 86,000. So this is going to be the representation of our gross carrying value at the end. So you come here, we just put our 86,000. So here we are saying 86,000. Then on the accumulated depreciation now, what we are saying is we have got the one that was disposed, so you have to remove the accumulated depreciation of that was disposed. This was disposed made with the cost price of 6,700 and the carrying value of 2,200 were sold on 1 April. So 1 April, remember 1 April 2018 is the beginning of the year. That's where the year is starting. So if you come here, you see that let's just try to see our financial year, where it's starting and where it's ending. So if you come here, you see that our financial year is starting on 1 April 2018. That's where it was disposed. So it was disposed at the beginning of the year. So we now want to find the accumulated depreciation when it was disposed. That is at the beginning of the year. So we are now saying you can just use the formula of saying cost minus accumulated depreciation gives us our carrying value. So we are saying we're going to use our formula of cost minus accumulated depreciation equal to carrying value, whereby our cost here we have been told that 6,700. So the figure that we are looking for is accumulated depreciation. And then the carrying value they are saying is 2,200. So we want to find the figure for accumulated depreciation. So basically, what we can do there is to just make accumulated depreciation substitute formula. So if you make accumulated depreciation substitute the formula, there is going to remain as accumulated depreciation is equals to 6,700 minus 2,200. Then try to calculate that. Let's try to see what we get. So we are saying 6,700. And then we subtract 2,200. Then we get 4,500. So we have 4,500. So this is accumulated depreciation of the equipment that was disposed. So this 4,500 is in the accumulated depreciation at the beginning. So you have to remove it since this one was sold. So we are saying in the beginning the accumulated depreciation for equipment we had 14,600. So what we are going to do is we are just going to remove it so that we remain with accumulated depreciation without the one that was disposed, was sort of already out of the business. So let's just try to see. So this is what we have. So it means now after removing the accumulated depreciation of the one that was disposed, which is 4,500, we remove it from the accumulated depreciation that we have at the beginning, so that we remain with the accumulated depreciation for the equipment that is the old equipment that was there after removing the one that was disposed accumulated depreciation. So this when we subtract this, you can just leave it like that, because we are going to make other adjustments in terms of addition of those depreciation of those equipment that are stayed in the business for the whole year. So we now want to calculate depreciation for old equipment that was there. So depreciation for old equipment, remember we are saying on costs. We are saying on cost. So we are just going to say the cost at the beginning, the cost at the beginning minus the cost of that one that was disposed. So that's also that will remain with the cost of equipment that stayed for the whole year. So if you go up there, you'd see that the cost that we have at the beginning, that is the gross carrying value at the beginning. We'll just check it there. For equipment, we have 83,400. 83,400. So we can just remove the one that was disposed is 6,700 here. Even with the cost price of 6,700 was disposed. So we are saying 83,000. 400 minus 6,700. Let's just try to see what we get then. So we are saying 83,400, and then we subtract 6,700. So we are going to get 76,700. So this is what we get in terms of the gross carrying value or the cost price of the old equipment. So this one stayed for the whole year. So we are just going to say 10% of this one to get depreciation. Depreciation for those equipment that were there for the whole year. So we are saying our rate is 10% on costs. Remember, when we are calculate depreciation using cost method, that is on cost, which is straight line method, we are going to say percentage times costs. And the cost is the gross carry value. So we are saying 10%, which is 0.10 as a decimal. We multiply by 76,700, you're going to get 7,670. So this is depreciation for the equipment that stayed for the whole year, which means we are going to add it here, 7,607. And then we are left with then we now calculate the depreciation for the equipment that was purchased. I remember the one that was disposed at the beginning of the year. So for that financial period, it didn't incur any depreciation. So we are just, the depreciation is zero because in this on 1 April was the beginning of the year, so it didn't stay any period there. So we leave it. Then we go to the one that was purchased during the year. This was purchased on 30 January 2019. So 30 January 2019, remember our year is ending on 30 March. So we just want to see how many months did this new equipment stay. So you'd see that it was purchased on 30 January 2019. So it means it stayed February and March only. So it stayed 2 months. So we are going to make a proportion of 2 months for that depreciation. So we are going to say 0.10, our percentage as a decimal, and then we multiply by the cost, which is 9,300, the one that was purchased, which is this one, and 9,300, and then we multiply by 2/12 because it stayed 2 months, and then we get the depreciation. Then if you do that there, let's try to see what we get. Let's try to calculate that one. We are saying 0.10 times 9,300, you get 930, and then you multiply by 2/12. And then you're going to get 155. So it means we have got 155, which we are also supposed to add here to get the total depreciation. So if you add there, you'll see that you are going to get 17,925. This is now our depreciation for equipment. So we come here, we are going to put 17,925 as our depreciation. So we are saying 17,925. So this is our depreciation, and obviously we subtract it from the gross carrying value to get our net carrying value. So if you subtract there, you'd see that you get 68,075. This is our gross carrying value. So this is what we have in terms of the first part. That obviously we now have the second part whereby we are now. So before we go to the second part, we just make our additions there. We add 25,000 plus 86,000. You are going to get 111,000. And then here we say 9,105 plus 17,925, you get 27,030. Obviously, subtract it to get the net here. So here you can say 111,000 minus 27,030, or you can say 15,895 plus 16,075. You get the same answer here, which is 83,970. So this is what we have. So we can go to the next second part of the question, whereby it's now this the reconciliation of carrying amount. Reconciliation of carrying amount, whereby here we are saying we have our vehicles. And here we have got our equipment. So what we are going to do is we are going to start with the balance at the beginning. So our balance at the beginning, remember this is a carrying value. So we are using carrying value figures. Remember, carrying value said we find it by saying cost minus depreciation. So we are going to find carrying value at the beginning. Carrying value at the beginning, always find it in the question. Let's try to see. So if you come here, you will see that carrying value at the beginning for vehicles is 18,700. Then for equipment at the beginning, we have 68,800. So these are the figures that I'm going to put there as our carrying value at the beginning. So if you come here, we're just going to put those figures. So we say for vehicles, we've got 18,700. For equipment, we've got 68,800. Then from there, we are supposed to add any additions at cost. So you'd see that for additions at cost, vehicles, there was nothing that was purchased, nothing was disposed. So it's a dash, which means there's nothing. And then for equipment, remember we purchased equipment. We come here at the we have got equipment that was purchased. Let's just try to go down to check that equipment. If you come here, you see that we've got equipment that was bought for 9,300. So this one, we've got an addition of 9,300. So here we are saying 9,300. And then having done that, we now adjust for disposal at carrying value. Disposal at carrying value. And then I remember we are also told that equipment, also we've got equipment that was disposed there, that is mentioned. Then here we see that we've got the carrying value was 2,200. Equipment with the cost price of 6,700 rands and carrying value, which is a book value of 2,200. So 2,200 there for equipment again. And when it's a disposal, it means it's going out, so we should show it as a negative. So show it in brackets. Here we've got nothing because there was no vehicles. We don't have anything that was purchased or disposed. So after that, we are supposed to adjust for depreciation for the year now. Remember, we calculated depreciation. So here now we have got depreciation for the year. So for depreciation for the year, we are saying we can just try to see. We did calculate that, so we can just try to see there when we calculated that one. So if you come here, you would see that depreciation for the year for equipment, to get the depreciation for equipment, remember we got 155 for the equipment that was bought during the year. And then for all the equipment that was there for the whole year, we got 7,670. And then for the equipment that was disposed, to say it was disposed at the beginning of the year, so it didn't accrue any depreciation for that period. So for depreciation for the year now, we are just going to say for the gold equipment, it is 7,670 plus the one that was bought during the year, 155, and then we are going to get your 7,825. So this is your depreciation for equipment. So for equipment, we are just going to put that one. For equipment, let's just put our 7,825. And then we have certification for the year. Again, we're going to show it as a negative. And then for the vehicles, remember we just calculated it. Let's try to see for vehicles what we have in terms of depreciation for the year. For vehicles, remember we calculated it there by saying 15%, because here we are given it as calculated as 15%. We are just doing the same thing that we did at first. So we come here 15%, and then we said it's using diminishing balance method. Remember, so we said calculated it by saying this one. This is the depreciation, and then the carrying value in the beginning was 18,700. So we calculated it here, and we got 2,805. We say 50% is 15,100 times carrying value at the beginning, which was 18,700. Then we got 2,805. So this is our depreciation for the year for vehicles. So we go back, put that one. So we are saying 2,805. And say we are saying it's a subtraction. And then after that, now we can make our calculations in terms of finding the net figure. So we are saying now right for vehicles, we're saying 18,700 minus 2,805, then we get 15,895. And then here we're saying 68,800 plus 9,300 minus 2,200 minus 7,825. We are going to get 68,075. So this is what we have there for the reconciliation of carrying amount. So having finished this, I will finish that calculation that we have in terms of the note of the property, plant, and equipment. So thank you for listening. Those who have subscribed, please subscribe and share. We're still coming with more videos as we prepare for exams. Yes, for this video, I'm signing out with again.